Hey everybody, we are kicking off a big week of earnings with Jim Cramer on the floor of the New York Stock Exchange. All right, Jim, we are struggling to stay positive in stocks here to kick off the week.
It's going to be difficult because as we get closer to the May 1 deadline for when we see whether the president's serious about steel, it puts in these, basically see how widespread the tariffs are going to be. Then I think that what will happen is that until we get to that, plus this ongoing tenure, which I don't think is nearly as important as the tariffs, every time we lift, I think sellers are going to come in. That's what I think we have right here.
And to anyone worried about the 10-year yield, they should watch your interview with First Horizon on Friday. He's not worried about the 10-year.
And now this is a two-step situation. I totally understand the market goes down on 10-year going higher, on the interest rate going higher. I totally get that. What I'm saying is after it goes down on that, that's a buyable event, okay? Versus the tariff situation, because we are getting a lot of inflation in the system. Now, not necessarily in parts of retail because of Amazon, but the Amazon factor, but there then you have the companies that are having to eat the cost of inflation and have their earnings going down. So we've got, and I have this all in a real money piece, it's all laid out, so just read it and you'll get exactly what I'm talking about. A viable situation after a crack on the 10-year, a non-viable situation if we ratchet up the tariffs. Now, this is my political view, and I tend not to really give this to people, but I think what the president's doing is right, trying to fight China. I know there's people who just say, listen, China can never win. That's so glib, and that is so fatalistic. And I really just think that is just a complete fallacy. But I know that the president says that some pain has to be taken in order to be able to get the Chinese to play fair. And the pain is going to be reverberating in the stock market. So that's just something that we have to accept, which is why I'm very neutral in the stock market, and we have 12.5% cash for action alerts. I'm not crazy about it. I like to raise even more cash.
And as you said in real money this morning, the stock market has done well during rising rate environments in the past.
It's done well, and it's been, I'm just looking at my personal history starting in 1979, but tariffs are negative. But again, they're negative for the stock market. They may not be negative for the United States. And those are very different things. They're diverging right now. And it's important to recognize the divergence because, for instance, I had Jim Fish on from Waste Management. Chinese decided no more. We're not taking any of your recycling. Well, that was negative. It hurt Waste Management's earnings for 8 cents. This trade war is serious. And it's going to stay serious. The president gave companies a huge tax break. And in return, a lot of them are going to have to take pain. And I think that the more people realize that, the more they will raise cash so that when everything kind of shakes out, they won't lose a lot of money.
Jim, let's move to earnings. You highlighted Kimberly Clark on your Mad Dash segment.
Well, I mean, look, I just said this is the line in the sand for this group because it was better than Procter. I don't like this group at all. We have very little exposure to it for action alerts. But Kimberly did a good job, and they had some nice single-digit gains. And in Kleenex was good, and diapers were good. Diapers was very bad for Procter. Talked about a lot of price competition. Looks like it wasn't that Kimberly didn't feel it that badly. Kimberly did cite raw costs, though. And again, the consumer packaged goods stocks have tremendous raw cost problems, and the Procter quarter was particularly difficult. So let's just understand, as you hear me, you'll hear more and more, I didn't like this, I didn't like that, I didn't like this. But it's not because of the tenure. And the vast amount of coverage that we get is tenure. And I think that's viable, but the tariff part is not viable.
And with the consumer space, we get Colgate-Palmolive on Friday. Are you?
I think that as I said in my game plan on Mad Money, if Colgate's down substantially ahead of time, then maybe it won't be that bad. But you get situations like Colgate, they also have big foreign presence. And you get the dollar stronger. We're starting to see the dollar go up. That's not good either. There's issues. This consumer, the idea is, are the consumer packaged goods stocks the next food stocks? And you know what happened to the food stocks? They're just terrible. So that's something I'm watching. And we own PepsiCo, and stay tuned for our exclusive program for Action Alerts people. But there's just a lot of worry there, and I'm not dismissing it, and I think people need to know that. That's why we've raised so much cash for Action Alerts. I don't particularly like the setup. I just don't. There's times where I'm not crazy about the market, okay? There's times where I think that I'm more cautious than I usually am. And this is one of those times. And I am sure that what will happen is people say Cramer said nothing. He told us nothing. I'll have been cautious on Mad Money. I've been cautious in Real Money. I've been cautious in Squawk on the Street. I've been cautious here, and people will say I wasn't cautious. There was some chowderhead who was saying, Jim, I how the way you flipped on Apple. What I said was Katie Huberty from Morgan Stanley said there's going to be a substantial consensus miss by Apple. What am I supposed to do? Just say, hey, ignore Katie Huberty? I mean, I'm a realist. And a lot of people are really stupid. They should just get the heck out of the stock market because they really don't understand what happens here. And I want, I was talking about the Jamokes who were in diapers during the Greenspan period. There's a lot of people who should just get out. And it's okay. Or you can own index funds. You can just be, take a longer term view and not fret this. And I'm not against that. And a lot of people didn't understand. I was urging people to get out in 2007 and in 2008. And a lot of people don't really care about that either.
They're nuts.
And I just think that, understand, I'm not crazy about the market. When we get to over 3% on the 10-year and we get past this tariff situation, maybe we can start thinking, be a little more aggressive. But right now, on strength, I do want to do selling. And on weakness, I'm not as inclined to want to do buying. And that's my stance. And my stance will always be ridiculed because they won't really know which stance I have. Or they will say, well, you big flip-flopper. That's obviously not true. I've liked the market for a very long time. Anyone who knows me knows that I've liked it. But I can't be, as I expressed in the Real Money piece, as positive as I'd like to be, both because of the 10-year crisis, which is regarded as a crisis by the media, and by younger people in this business, and then the real issue of tariffs, of which I support, but recognize that there's pain. And, the president's telling you that. And there's going to be pain, so position yourself. And when you listen to these consumer product stories and you listen about the raw costs, you know that you can't be as positive. So do some homework or get out. And get out of my face.
All right, Jim.
Get the hell out of my face.
There's also worry with Hasbro.
Do some work. Just do a little work. I'm not worried about Hasbro. I said that the company told everybody that it was going to be bad. It was bad. The stock, people sell that down 7. There's a good example. Company tells you be very concerned that it's going to have problems. But do people listen? Do they do any homework? Do they watch Brian on my show? No. They just sell it down 7. Get out. Get out. This tougher market. It's a tougher market than it's been for a while. So it's okay. Put the white flag up or do some homework and don't sell Hasbro down 7. And recognize that there can be some constructive situations, but there's a lot of destructive situations. And recognize that I used to like the consumer product goods. I still like PepsiCo, but I don't think PepsiCo's going to shoot the lights out. I like Estee Lauder, but that stock's moved too much. But there are a lot of people who just got in the market because it's been a really good period, and they're going to be blown out of the water like they always are, like the people in 2001 who got blown out, 2001, people in 2007, 2008. I want people to be steeled against this and understand what they're doing. I don't want you blown out. I obviously want more people in, or I wouldn't have started TheStreet.com. But I do feel that one of the things that people have to recognize is a tougher market. And as long as you recognize a tougher market and you can ride this out, that's good. But don't look at it every day if that's you. Don't look at it every day. And if you're actively trading and you haven't done any homework and you're just operating on the charts, I really suggest that you pull your head out of the sand and move on. Just go. It's okay. For those of us who like this longer term, this is an interesting opportunity. But for those who can't read a single analyst report and don't know how to listen to a single conference call, it's not for you. Those are the people who are marginal people. They got to go now. Go longer term. Get in S&P funds.
All right, Jim. It's good advice. Yeah. We're going to continue talking about.
I don't want you hurt, but I don't want your arrogance. The market is a great humbling experience. It's humble for me all the time. But if you feel no humility, or if you look at me and you think, well, what is that guy's talking about? Well, get out. I mean, because look, I've been around a very long time. I didn't go to college to get stupid. And I'm trying to help. But if you think that I am hurting you, it's because you haven't done enough work. And get in the conversation and do some homework. Get out. Because you are single A. Okay, you are pony living. Get out.
Jim, you're trying to protect people.
I want people to be longer term and stop looking at it and stop trading unless they understand how to do it. Because I don't want you to get hurt. And I see people who are being really arrogant and have no humility, and they are the ones that will get blown out. So why not get out now, people? I am warning people, okay? I am warning people that this is a much tougher market than what they've had in a long time. And it's been a good run, but now understand the risks. A lot of the stocks are very risky now. That's all. I just think you got to be more cautious. But if you think you don't need to be more cautious, be my guest. But don't listen to me and get out of my Twitter file and stop reading me. Because if you don't understand the notion of caution, there's really nothing I can do for you. There's nothing I can do for you.
Okay. Jim, we'll leave it there.
Yeah.
Thank you so much.